Alright, so welcome back to another Forex video. My name is JSW for those who don't know me. And yeah, we are officially back. We haven't posted any videos like 1 month now. But we had some issues. Well, not really issues, but I wanted to upgrade my equipment. Alright, and I actually tried to upload videos, guys. But my MacBook decided that it would delete the videos. So honestly, I got demotivated. Right, like the videos that I made was super fire, and the MacBook deleted the videos. I don't know how, right? Because I recorded some stuff on the PC, like to show you guys about market structure and multiple time frame analysis, right? And the MacBook decided that it would delete the videos. So I mean, not my fault. I'm really sorry about that, not posting for so long, but we're back with Forex contents, because I know you guys love these Forex contents, and I realize you guys be texting asking when I'm gonna upload and so on and so forth, right? You guys can just go over to my Instagram, follow me at jsw_tv. You guys can ask me whatever question you guys want over there, right? Also, you guys know I'm doing mentorships. If you guys want mentorship, alright, you guys can hit me up on my Instagram, of course, and we can talk about that. Alright, but today, before we get into the video though, I want you guys to go ahead and subscribe to the channel, turn on the post notification bell if you're new, and without further ado, let's get right into the video. Do multiple time frame analysis, right, and also understanding more about market structure, right? Because I'm a market structure trader, so you guys will never see me teach you about like indicators other from this one that I have right here, which is the 14 EMA, right? I know nothing about EMA indicators, sorry, right? So for most of you guys that is texting me asking me about which EMA, which indicator is the best, I know nothing about indicators, right? Because I do not use indicators to trade. I am a market structure trader, right? I don't even really focus on price action, because persons misinterpret price action with market structure, right? Market structure is different from price action. Price action is understanding the formation of the candlesticks, right? And understanding each candlesticks. Like this, they would call it a doji, right? And so on and so forth. The different type of candlesticks, right? Which is mirrors and all those different types. I don't even know the names of all of them, because I don't focus on price action. I focus on market structure, right? Higher highs, higher lows, higher highs, higher lows. And the reason for that is that the market has to create higher highs and higher lows, because this is how the market moves in a trending market. So once the market is trending, and when I say trending, I mean the market is either moving up or the market is moving down. I'm not talking about a consolidating market. You would want to stay away from a consolidating market if you don't know how to trade it. I myself, whenever I see the market is consolidating, right, I try to stay away from the market, right? No matter how big the range be, like even if the range in between is 100 pips, I stay away from it. I simply move to a different pair, right? Because if the market, you can sell the market at demand or supply era, not demand or supply era. We call that the one at top. Think it's demand era. See, I don't even know about that really, because I don't use that type of trading. All right, I don't use those type of trading, to be honest. So the market can be at a supply era, and you sell it, and the market simply turn on back on you and continue to go up. So I don't trade support and resistance and supply and demand and so on. Strictly market structure with the market trending. Alright? So today I'm gonna show you guys a little trick that I use, not a really a little trick, but how I actually trade, right? Which is top-down analysis. Some of you guys might know it as multiple time frame analysis, but it is top-down analysis. And the reason why it's named top-down analysis is because you're analyzing the market from the higher time frame straight to the lower time frame to get your entries, right? So first thing first, the market trends on every single time frame, guys, right? And what I mean by this, if you go on the weekly time frame, even the monthly time frame, right, you will realize that price is creating higher highs and higher lows. So this is the weekly time frame. And as you can see previously over here, so the market was creating lower lows and lower highs, trending down, right, until the market finds some form of support and now started look like it want to trend up. So the market break the previous higher low, right? Somewhere in around this level, right? Maybe I will look for it, to be honest, right now, and pull back to retest and then pushes up, right? So this is the weekly time frame, and as I can see, the scale down on the even your 5 minute time frame, you will realize the market is creating lower lows and lower highs. Same way, as long as the market is not consolidating, the market is trending. So the market trend on every single time frame, whether weekly, monthly, yearly, daily, whatever time frame it is, right? So I personally start off on the weekly time frame, and this is something that works well for me. When I just started to trade, I started to trade from the weekly time frame and do top down analysis, go straight down, analyze the market from the weekly time frame and go straight down. But the thing is that I was doing wrong was that I was creating zones to confuse myself, right? And I used to put plot support and resistance levels along my charts, right? So by the time I reached down to my um, entry time frame, which is my 15 minute time frame or 1 hour time frame, it was so confusing. So my charts used to look something like this. Like I see a support here, I put a line there, right? I see a resistance there, I put a line there. I see a resistance here, I put a line there. And I see one here, I put a one there, right? And then when I go down to my daily time frame now, I look for more support and resistance levels, right? Then I plot more support and resistance levels. So by the time I reach down to my 15 minute time frame or 1 hour time frame, my chart was completely full of lines and it was so confusing. So if you guys are doing this, I'm telling you guys no. If you guys are doing that, if you are trading like this with a lot of lines, I don't care. Nobody want to tell you that if price leave from this zone to this zone, right, you can buy. If you break this zone, you can buy to this zone. No, don't trade like that, because what's gonna happen is that if price is sitting in this at this zone right now, and then price reach to this level and then price break, you don't have enough range from here to here. So you're gonna say to yourself, you know what, I'm just gonna wait to see if price break here, right? And then when price reach here, you're gonna say, alright, I'm just gonna wait to see if price break, then I can buy to here, right? And you go keep doing that until you don't get an entry, and that's gonna lead to FOMO, fear of missing out, right? So you guys, please don't plot a chart with a lot of lines like this. It is not relevant. All you need on the chart is 2 to 3 lines, right? And not even lines, to be honest. You just need zones, levels, right? The rectangle tool, because support and resistance is not a single line. Support and resistance is zones, right? Right? It's not just a single line like this, right? Because price can come to this area, right? Let me show you something. Alright, and they respect this level, alright, and not because it don't pinpoint touch the what you call that, vertical line or whatever, horizontal, what you call this, horizontal, I don't even remember, to be honest, horizontal line, right? You're gonna say, oh, price did not come back to this support area, right? So support and resistance are zones, right? Are key zones in the market where price respect in the past and could potentially respect again in the future. That is my definition for support and resistance. Alright? So it is not a single line. So I don't want you guys to be plotting your charts with single lines and plotting your charts with too much lines. Right? So I start from the weekly time frame. Right? I look at the trend of the market. Alright? I'm not telling you to go zoom out. Right? Don't zoom out the charts and then say, oh, this is going down. In theory, you're not wrong. But I don't want you guys to do that. Go on this little refresh tool, reset tool, click it, right, and zoom up it. Focus on the most recent price action, right? Focus on the most recent price action, right? You wanna see price trending. So now that we see price break, you can even use a counter trend line to assist you. So price break from the downtrend, and now looking for to form bullish structure. So price from higher high, higher low, higher high, right? So we obviously see on the weekly time frame that price is in an uptrend for sure. So our bias should be buy, right? Buys only, right? So we scale down on the daily time frame to get a bit clearer view of what the market is doing, right? Now we see price creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, right? So the previous higher low on the daily time frame is this zone, right? And I can take you guys through the whole structure thing, because if you guys don't understand this is the main part of trading: higher highs and higher lows, market structure. Right? If you guys don't understand, this concept might seem so simple, but if you guys don't understand the higher highs and higher lows and break and retest and so on, you guys really need to understand it. It is very important. I myself, as a trader, when I just started to trade, I used to skip all of this. Right? I didn't think that it was so important. Like, persons was telling me about higher highs and higher lows, and I just said no, bypass that. And I had was to learn the hard way and come back to learn all of this all over again, because I realized that the market only moves in this particular way, right? So if you guys want to know more about higher highs and higher lows and break and retest, you guys can let me know, and I do that in a separate video, and I'm going more in depth on everything. Alright, so time and every single time frame the market trends, right? And the market trends, and there are trends within trends. Alright, I'm gonna explain that a bit. Alright, so this is, for example, the weekly time frame, right? Higher high, higher low, higher high, higher low, higher high, right? So this is the weekly time frame. You see, on the weekly time frame, right, this is called, well, this is called a push phase. There are two phases in a trending market: the push phase and the exhaustion phase, or the push phase and the pullover phase, as you guys may know. Alright, so on the daily time frame and the weekly time frame, in order for price to create the push phase, you have to have a couple candlesticks pushing up, right? But those couple candlesticks pushing up, if you scale down on the lower time frame, right, you're gonna see more candles, right? So for example, you scale down on the daily time frame, right, you're gonna see more candles, right? So the lower time frame you go on, the more candlesticks you will see on the charts. So obviously there are more noise, right? So let's give you a good example. So if you have like one daily candlesticks, right, and you go on the 1 hour candle. If you highlight one daily candlestick and you go on the 1 hour candle, in order for that daily candle to be complete on the 1 hour time frame, you have to have like 24 1 hour candles, right? Because there are 24 hours in one day. So you'd have to see 24 1 hour candle in order for you to get one daily candle, if you guys understand what I'm trying to say. Alright? So basically, if you once you go on the lower time frame, you guys will basically see more candles. Alright? So I basically use the higher time frame to eliminate that noise, the confusion. Right? So if you're on the lower time frame and the market seems a bit choppy to you and confusing, you guys just scale up, go and utilize your higher time frame, and everything will become much more clearer. Alright, so we have a push phase here on the weekly time frame. Alright, but if we scale down to like the 4 hour time frame, this push phase, right, on the weekly time frame would be a total trend up, would be a total uptrend on the 4 hour time frame. So you'll see a sequence of higher highs and higher lows, higher highs and higher lows being formed for the push phase, right? And this is how the market moves, right? So if on the weekly time frame you would just see a couple candles pushing up, you're not really see the higher highs and the higher lows being formed on the higher time frame. But once you scale down on the lower time frame, you're gonna see the structures being formed, the higher highs, higher lows, the break and the retest, and so on and so forth. Right? So you see that the overall direction of the market is bullish on the weekly time frame. Right? You want to stick to that bias as bullish. So you want to be looking for buys. However, there is something that you call counter trend trading. And counter trend trading is trading the opposite direction of the market. So if this on the weekly time frame is a trend up, and on the 4 hour time frame is a uptrend, whenever price ready to form the higher low, on the weekly time frame, right? When I scale down to the 4-hour time frame, it is gonna be a total trend down, which is a sequence of lower lows and lower highs. And of course, you guys can take sells, and that is called counter trend trading, right? There's nothing wrong with taking sells, because if you are on the weekly time frame and you see price creating the exhaustion to form the higher low, this is gonna be a lot of pips, right? In order for you to form the higher low, and it probably take like couple days or couple weeks, well, in order for the higher low to be completed. So whilst on the 4-hour time frame now, you are going to see structure being changed when price create this uptrend and now ready to form the higher low, right? And I'll give you the example over here. So price was pushing up to form the push phase, right, on the weekly time frame, right? So now it ready to form the higher low. So price then create a reversal pattern, which is a double top, right? Price failing to create a new high, right? Then price break the neckline and retest lower lows, lower highs. And as you guys can see, this is now a total downtrend on the lower time frame. So now that you'll be saying to yourself, oh, the market reverse. The market is now in a downtrend. When really in fact on the larger time frame, the market is just creating the higher low, the pullback. So the market now creates the pullback and finish create the exhaustion phase on the higher time frame. The market will start consolidate or create some form of reversal pattern one on the lower time frame once more. You have a lot of reversal patterns: double top, double bottom, head and shoulder, triple bottom, triple top, you name them. The market will create some form of reversal pattern, and the market will consolidate and then break, retest, right, and then start give you an uptrend again to form the new higher high. So this is how the market moves, guys. This is market structure, right? This is market structure, and if you guys understand that, you guys are on your way. So we're on the live charts now. So the market create higher high and create a higher low on the daily time frame. If you go on the 4-hour time frame, you guys can get a clear view of what I was talking about. So on the weekly time frame, let us mark it out so you guys can see that I'm not bluffing. On the weekly time frame, on the daily time frame, sorry, this here is a push phase, this is a pullback phase, this is a push phase, this is a pullback phase, and this is another push phase. Alright? So you scale on the 4-hour time frame now. Alright? And what you guys see? What you guys see? You have a total uptrend. Higher highs, higher low, higher high, higher low. Price creating higher highs and higher lows. See it? Double top. Price creating lower lows and lower highs. Form the higher low. Then price start form a next uptrend. Higher highs, higher lows, higher highs. Price then create a next double top. Lower lows, lower highs, lower lows, lower highs. Price then break, retest, start form higher highs and higher lows, higher highs and higher lows. So price is now in the action of creating a new high. As you guys can see, the market did create a new high, right? Let us go on the daily time frame to just clear up all that noise. Delete this for a sec. So price has now created a new higher high, and you should never enter the market in a push phase, right? So if we're looking at this on the daily perspective, then the market is currently in a push phase, so we don't look for entries. We simply wait on the market to do what? Pull back to form a higher low, and then we can buy again. Alright? One thing though, if the market don't break the previous higher low in a uptrend, you guys are still in a uptrend. So the market can come back even to this level. Alright? As long as you don't break the previous higher low, you're still in a uptrend, you can still take buys. In a downtrend, as long as you don't break the previous lower high, alright, price can come back to this level and still sell. Still in a downtrend. So guys, bear that in mind. try to understand market structure, right? How the market move, and utilize the different time frames. Good. So now that I see the market in a push phase on the daily time frame, I can scale down to the 4 hour time frame, right? You can see where you guys could get a lot of buy opportunities, right? And I'm just gonna highlight one of these high lows for you guys to actually scale down to my 1 hour time frame, then my 15-minute time frame for entries, and show you. So now this is a buy opportunity. So the price push up and pull back, right? Once you see the exhaustion, you want to see two candle with 4 hour candles of wick rejections, or 1 4 hour candles of wick rejection. So I see this candle pull back in the structure, then the other candle pull back. I simply scale down to my 1 hour candle time frame, sorry, right? And allow for price to break and retest structure, right? So the market is trending down, right? Price then push up and then pull back in the structure. Can scale onto my 15-minute time frame for my entries. I'm not really go in depth on entries right now, right? But the market was trending down. Price then break the previous high low, break, retest. You can go in for your buy in around this level. Stop loss always will need structure, right? 9 pips. Knowing me, I'll go for 1 to 2, 9 and 9, 18. I'd hit take profit, right? Just like that. So it is kind of simple, but you guys just need to practice your multiple time frame analysis. So as I said before, to recap, when I'm trading, I start from a weekly time frame, right, to see the overall direction of the market. Not saying I'm just gonna take trades in that direction now, because if I see price is creating higher highs and higher lows on the weekly time frame, you can always look to sell the pullback on the weekly time frame. So now scale down, right? For example, here, so on the weekly time frame, when price ready for form the higher low, you can always go to drop to your 4 hour time frame and look for sell opportunities, right? Because price will start from lower lows and lower highs, come back down from the higher low. So you can always look to sell, right? Then price start consolidate or something, break, and start create another higher high. So I hope you guys understand this video. I hope I didn't go off on a tangent too much. And I hope you guys basically get the gist. It was very simple, and if you guys do understand, just watch over the video over and over and over and over. Practice, and you guys go ahead and backtest this first before you guys try it on a live account. Please bear in mind that everybody trade differently, so I don't need anybody to come and tell me that no, this is not how you do multiple time frame analysis or top down analysis, or this is not how you do this, or this is not how you do that. Everyone trades differently, and this is what I've been doing. This is what works for me, and this is what I'm teaching you guys to actually go and backtest first before you guys try it on your live account. So this is just for educational purposes. For all those persons that have their different opinions, you guys can keep it to yourself. You know, please drop a like on the video if you guys did enjoy the video. Subscribe to the channel if you guys are new. Alright, turn on the post notification bell. Follow me on my Instagram, and leave a comment of which video you guys would like to see next. And I'm back with the videos, guys, so just leave a suggestions, and I'll see you guys in the next video. Remember, guys, think, plan, execute. Peace.